the number of households that will be required to be evicted is a tidal wave.
A perfect storm is brewing for many Canadian homeowners.
The pandemic-related issues meant that the banks were not power sailing or foreclosing on mortgage holders. Next, the average house price went from a lower number to a much higher number. Now the interest rates are going back to their historical averages. Their incomes haven't increased that much. Therefore, their disposable income to pay the mortgage is not there.
Leading to a possible spike in the number of mortgage defaults.
You're in your house, and then you get a letter from a bank, the courts, and they're telling you to leave. You don't have the financial resources anymore because you've spent all your money. Where are you going to go now?
It is a grim reality made even more dismal in Toronto when you tack on a potential property tax increase.
We're talking about property tax hikes, the biggest since the 90s, late 90s.
Penny Ireland isn't worried about interest rate hikes, but as a homeowner, she cannot avoid paying taxes.
I don't have a mortgage, so I don't have to worry about it.
But the taxes?
Right now, we pay $4,000 a year in taxes, so if it goes up $1,000, yeah, it's going to pinch.
If there is a silver lining to current conditions, it may be for the new home buyer.
We haven't seen inventory sit for as long as we have in a very long time. In the old market, a lot of buyers were spending more time buying an iPhone than they would a house. So, I mean, it's a little different now.
Advice from Ashley McInnes: talk to a realtor, talk to a broker, make sure you can afford what it is you are committing to. The reality is there are some tough times ahead. Caryn Lieberman, Global News.